You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. For more information, please visit ftserussell.com, cboe.com, and cmegroup.com. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That music means it is Thursday. It is 1:30 p.m. Central, 2:30 p.m. Eastern. It is time once again for TWIFO, This Week in Futures Options, a program where we break down everything cooking on the other side of the fence, the futures options side of the fence. We're going to talk all sorts of fun stuff. I think some equities are going to sneak in there as well today because it's kind of unavoidable given everything else that is going on. Of course, you know what else is unavoidable? Your ratings and reviews. So keep leaving them on your platform, wherever you get our content. Could be Apple Podcasts, could be Google Podcasts, the app stores where a lot of you get our app, YouTube, wherever you get our stuff. Keep rating, reviewing, maybe commenting, wherever you feel up to doing. Really does help new folks continue to discover the content in these ever-trying and difficult times that we are all living in. And let's see who else is joining me today on the program to help me break down these insane times. We all thought 2021 going to slide right in like a lamb. Nope. It's already doing things we never expected, even in 2020. Hey, it's another day that ends in Y, so why not? Let's head out now to the quiet, the tranquil, the serene FTSE Russell Studios, where I am pleased to say I am joined once again by my old friend, Mr. Sean Smith, the Managing Director of Derivatives Licensing over there at FTSE Russell. Mr. Smith, welcome back to the program, sir.
Thanks, Mark. It's always great to be back. We're going to have a great show today. Got lots to talk about. Really looking forward to having a great show.
Should be a fun one, because also joining us, holding down the CME Group hot seat today, our old friend, Mr. Matt Amberson, the founder over there at ORATS, a.k.a. Options Research and Technology Services, a.k.a. the Oracle of New Hampshire, a.k.a. the guy who creates all those cool earnings volatility reports you guys love to devour this time of year, aka my cohort over there on the advisors option, which through the strange ramifications of editing will probably hit the network after this one. So all sorts of fun stuff abounding. Mr. Matt, welcome back to TWIFO, sir, in these crazy times.
Great to be here with you and Sean on this historic day. Crazy day in the markets. Looking forward to getting after it.
All right, let's get after it then. Let's kick it off the way we want to do with our movers and shakers report.
It's time to find out what's rallying on the light side and falling to the dark side at CME Group this week. It's time for the Movers and Shakers Report.
All right, let's do it. Movers and shakers, by the way, you guys, as always, can generate your own reports, the TWIFO reports over there, cmegroup.com/TWIFO, TWIFO, or TWIO, TWIO. Both of those should get you where you need to go. Mr. Matt, as our guest this week, I will allow you to choose where should we begin our journey, to the light side, aka the upside, or to the dark side, sir?
Let's start on the light side.
All right, let's do it. I can see why you and Sean get along so well. To the upside here, listeners, if you're wondering, did Bitcoin break into the top 5 this week? Nope. It's number 12, a meager 1.27% to the upside. Last week, it was number 1 in the other direction, off nearly 20%, 19.5%. So a little bit quieter week for Bitcoin. Number 5 on our movers to the upside this week, listeners. Lean Hogs, good old hashtag hog love, back in the top 5 here, 3.38% to the upside. Last week, it was number 2 in the same direction, up 4.03%. Doing decent paper last week as well, 28,000 contracts. So perhaps we'll see, maybe a little bit of hog love on the show today. Number 4, RBOB, up 3.75%. Number 3, the old euro dollars is always lurking somewhere, up 5.41%. It was number 1 in this direction last week, up over 9%. Number 2, Nat Gas, day that ends in Y. Nat Gas is moving and shaking. This week, it's up 7.09%. It was number 3 in the other direction last week, off 6.6%. And number 1, yet again, this is another one that I wish we can analyze more of. It's a shame. Lumber, up 15.75% this week. It was number 2 in the other direction last week, off nearly 17%. So huge swings out there in lumber, but it does like 3 contracts. So there's no options paper really to parse out there. I wish there was, because there'd be a lot to talk about. Lumber moves, and yet unfortunately, the options not keeping up. To the dark side, number 5 to the dark side, the S&P Mid-Cap 400, off 2.35%. By the way, if you're wondering, it's actually a pretty equal week with the exception of our number 1 to the upside, lumber. That blows the doors off everything else on the chart. But outside of that, the report is actually pretty evenly split between movers and shakers, even if the dark side is not quite as extreme as the upside is this week. I said number 5, E-mini S&P Mid-Cap 400, off 2.35%. Number 4, palladium in the metals camp, off 2.43%. Number 3, the peso, off nearly 3%, 2.98%. Numero dos, back to metals, platinum, off 3.18%. And number 1, with a dark side bullet this week, is iron ore, off 4.25%. We know we added a little wrinkle to our movers and shakers report, listeners. Started breaking down the movers and shakers from a vol perspective, too, something you guys have been asking us about for a while. Not a huge vol week to the downside, with the exception of our number 1 decliner this week, Class 3 milk, the 30-day contract, off nearly 12%. Now, that's a front month contract. So take some of that vol move with a little bit of a grain of salt, but still, there's a lot of vol coming off. Number 2 to the dark side on the vol perspective was also Class 3 milk, the 90-day, off about 3%. So big difference there between the front month and the 90-day. They got euro dollars there, number 3, off about 2.75%. Bitcoin, actually, last week, it was dominating our decliners. This week, not so much. The 30-day Bitcoin only off about 1% this week from a vol perspective. So that's a rounding error in Bitcoin land. On the vol advancing side, maybe you can guess what's going to be number 1. It's lumber. 60-day lumber up 10.5%, followed by the 30-day lumber up 9.75%. The S&P 30-day, so the front month S&P 500, up 9.25% from a vol perspective as well. Number 4, our old friend, the Russell 2000. It's been moving quite a bit, up 9% from a vol perspective this week as well. Number 5, all equities in the bottom half of our top 5 vol advancers, up 8.25% for the 30-day out there in the NASDAQ. You know, we just touched on equities. They're moving a lot, and they are obviously dominating the conversation out there this week. So we got to start there. Let's hang our hat first in equities.
It's time to explore the volatility swings, skew changes, and hot options trades in your favorite indices. It's time to talk equities.
All right, everybody, welcome to the equities section. We got to get into all the vol and everything in a second, Matt, because it's obviously what we're here to talk about. But we got to kick things off. It's the elephant in the room. We talked about it a lot on the option block. We have to touch on it here as well, because it is actually germane to our conversation here on TWIFO as well. We talk a lot of Russell 2000 on this show. There's a lot of futures and options trading on that. And a single name, a certain name really, has been dominating the conversation of all Russell 2000 over the past week. You know what it is. It's GameStop. It's short frenzy, the madness that has gone on. If you're curious about all that, listeners, check out our options bootcamp program. Hit the network yesterday, explaining all the various intricacies of what's been going on from a short squeeze and indeed a gamma squeeze perspective out there in GameStop. But it is now the number one overall stock in the Russell 2000 as well. Yet another unintended consequence of this mad short selling frenzy out here. So it overtook Plug Power. That was the number one stock in the Russell 2000. Now, as of this morning at least, it is GameStop. So let's start there. Matt, you and I chatted about this a little bit earlier this week before we get into the other broad equity stuff. This has to be just as flabbergasting to you as it was to me and everyone else out there who watch these markets day in and day out. What are your thoughts on this mad short squeeze explosion in GameStop, sir?
Well, I was watching it closely because I had a very small position that I tried to get out of today. It opened up at 250. It went straight to almost 500. And then went back to 150, and now it's about 225. It is easily the most insane. I bought and sold options with 1,000 implied volatility, Mark. 1,000. It's crazy.
That's amazing. And, that's almost, you have to do it just for posterity at that point.
The shenanigans going on were crazy. I mean, the stock must have stopped 3 or 4 times when I was trying to get out of this one lot by one lot. And, I'm hearing some terrible things about, putting pressure on Robinhood to not allow people to trade it. And, this is going to get, this is an historic day. Crazy that we're here together talking about it. We thought yesterday was, and the days this week has been something. Well, today was, unlike I've ever seen before. And I traded this company called Prestec way back in the days, and it was a short squeeze. It went to 900 from 20, and it didn't even behave like GameStop. So there's going to be a lot of ramifications there. Wall Street Bets is the one that's the Reddit page that's really pumping up this stock. They're threatening to close that down. But their readership has gone from 2 million to 4.5 million in the last 2 days. So it's just something like I never thought we'd be talking about or have seen before, Mark. Just a crazy day.
I think we were all hoping that we had put that sentence, "I've never seen X before," behind us in the year that was 2020. And yet here we are, 2021. We've already said it multiple times just in January. But you're right. This is something unlike anything I've ever seen, you've ever seen. I don't think anyone's ever seen anything quite like this for all the reasons you mentioned and many more. We certainly have not heard the last of this. The regulators are cracking down. The Congress is calling for investigations. There is a huge outcry on the street about lacking access to the liquidity on the brokers and huge blowback against firms like Robinhood and others for shutting down opening transactions. So there's a lot of other ends. And as you mentioned, the options trading at a 1,000 volatility, listeners. Think about that. People complain about how volatile Bitcoin is. It was around a 150 at its height, maybe close to 200 there. It's talking 1/5 of what's going on in GameStop right now. Spreads all over the place. We were joking on our option block program. One of our listeners got filled. He bought a debit spread for a credit. He got paid to buy it. So insane things are happening in this world out there right now, listeners. So we have to touch on it because it is the 800-pound gorilla. It is the thing that is going to send ramifications and reverberations through all of these markets for quite some time to come. And you think we're being hyperbolic about that, listeners. We are not. This is not something anyone ever really saw or anticipated and we have not heard the last of this. But let's get into all the craziness on the equity front as well. Let's set the table here from a vol perspective. Coming into showtime, we saw our old friend RVX, which you mentioned before, has been stubbornly clinging to that 30 handle for a while, rallying a bit this week, up about almost 4 2/3 points, putting up a little bit north of the 35 handle. So getting a bit of a lift out there. RVX, obviously the VIX of the small caps, aka the Russell 2000. VIX itself come into showtime at about 27.5 after getting a nice bump yesterday from the big macro sell-off. Some of that coming off today, but it's still up net from our show last week. It's up to about 27.5 coming into the start of the show. Puts up a little over 6 points, about 6.25 points from this time last week. VVIX, the vol north of that 120 level we like to watch. Now it's close to 130, 129 and change, up about 15, almost 16 handles from last week. Vol Q, a.k.a. the at-the-money vol of the NASDAQ 100, a.k.a. the newest addition to the vol trading landscape over there at CME. That's at about 27.75 coming into showtime. This puts it up about exactly 4 points from where it was last week. So equity vol across the board, getting a little bit more juicy this week. That VIX to RVX spread, so the large cap to small cap spread, about 7.5 points. It's actually come in a little bit. It was about 9 points last week. So VIX was moving, RVX, so they were both moving, but not as much, obviously, as they were last week, where we saw kind of VIX falling off and RVX staying steady, and that kind of made that spread widen out. This week, they both moved to the upside, and that helped kind of squeeze a little bit out with VIX moving a little bit more this week to the upside. And then we've got the VIX to vol Q, so S&P to NASDAQ vol spread at about 2 1/3 or so. That's pretty much exactly unched from last week. It's not a lot of movement between NASDAQ and S&P, at least at the money vol over there. So there's a lot to unpack there. Let's start there. Let's go back out to the FTSE Russell studios. Sean, a lot going on in the world of the Russell 2000 this week. What has been lighting up your tape, sir?
It's really interesting times. And again, Matt, just great to have you on the show. I have to say, I think, Matt, you were on the show when we brought up the volatility analysis between RVX and VIX pre-holiday, where the market was rallying. Russell 2000 was headed to that 1800 level, and there were upside call buyers, and the RVX stayed bid because of that upside call activity. And that has just persisted to this day. And I think that's why we're seeing just a little bit of tightness in the spread due to the spike in VIX. But RVX hasn't let up. And Mark, we've talked about this almost on every show. And I think it all started back when Matt joined us a little while ago. He specifically commented on the upside call buying. And we've been mentioning upside call buying on every show since then. And it just hasn't stopped. Through the rally of Russell up north of 2,000 and 2,100, that upside call buying has continued. I'm sure we'll get some analysis of that today, but really interesting times. There's a nice blog that came out from our FTSE Russell team member, Philip Lawler, who's our head of global investment research, and it's called Russell 2000 Sentiment Gauge is Running Hot. And according to the Composite Sentiment Indicator, scores of Russell 2000 is outperforming, or at least the upside indication is, it's got a stronger indication than the Russell 1, FTSE Europe, FTSE Emerging. So it's a nice blog. You can find it on FTSERussell.com/blogs, but really interesting times. And the trade continues. CME seeing record volumes in their futures. SIBO seeing, our partners at SIBO Global are seeing upside volume in the Russell, the RUT contract that trades at SIBO. And, soon they're going to be having mini Russell options as well. So the option activity is, in terms of volume and open interest, is up. The futures activity, volume and open interest is up in Russell 2000. It's exciting times. Exciting times indeed. And Matt, one of the reasons we wanted to have you back on today, because you were one of the first people to really start crunching the numbers and notice
this crazy spike that everyone is kind of awakened to now out there in Russell 2000. Lost track of how many people are coming at me now wanting to talk about Russell 2000. We're back a few months ago. You were kind of on the early part of that charge before the huge upswing we saw in November into the latter portion of the year, and of course has continued into January. In particular, you were fascinated with the 5 delta calls out there. Not a term we throw around too often here, 5 delta calls, but they really came on your radar last time you were on because of some interesting evolution out there. That strike, that 5 delta call strike has moved a bit since the last time we chatted about it. But I'm curious, Matt, what's going on? What are your models telling you out there from a skew and an overall just Russell 2000 perspective these days, sir?
Well, yeah, it's, so what we do is we look at the 5 delta calls and we divide those by, some other one. A lot of times I'll use the 75 delta. So deeper in the money calls and related to the out of the money puts. And what we do is we do a Russell 2000 component weighted. So we take all of the components of the Russell, weight those volatilities out at the 5 delta, weight the volatilities at the 75 delta, and do that ratio. Now, normally, in traditional equity skews, the high delta calls or the puts are much higher volatility than the calls. Like typically, calls volatility gets sold by covered call writers and people buy puts to protect their assets. Well, that's all flipped on its head recently. And when I was with you in December, I started pointing that out. It's even higher now. This is the highest level we've seen ever. And it is, the last week or so, it's just gone up. Now the calls are, 2.5% higher than those, 25 delta puts in implied volatility, which is, you never would have thought that. And it's, again, what do you attribute it to? I think it's got to be a lot of this Robinhood effect where, people are just buying these calls and and not even the 5s, the 1 delta calls, like, anything that they could get a hold of small enough to get in their accounts, they're buying. And, these market makers are getting short these calls. And then as you see these rallies go, they're, as a past market maker, you have to, you exacerbate that move as it starts to go up through your short strikes. You need to buy, and a lot of people are watching that a lot closer. I've never seen so much, cutting up of a market maker's position now. Like people are really looking at, where are the gamma holes or where the gamma accelerants in the market maker's portfolio, and now a lot of those are in the out of the money calls. So when it starts going up, it goes up faster, and so yeah, it's been going up, and it's as high as we've ever seen it, and it's really causing a lot of consternation with the market makers, Mark.
I like that term, gamma accelerants. You're right. It's exactly what we saw out there in GameStop. They call them the unwashed one-lot retail masses, but they were savvy enough to spot the opportunity for quite an aggressive gamma squeeze out there, and that certainly has contributed to everything we've seen out there. Speaking of what we're seeing out there in Russell 2000, let's pull up some of the paper out here. You guys can generate this report for yourselves. CMEgroup.com/TWIFO is the place to go. If you did that, you'll see coming into Showtime right now, Russell 2000 actually off a little bit on the week, off about 2.09% since Monday. And let's see here, the most action out here this week, still a pretty active week out here. It is in that front contract going away in one day. So kind of hard to parse a lot of skew and vol out there. About 30% of the paper went up. Then let's go out to March. 21.5% of the paper went out there as well. That vol, if you're wondering, 32.5, up about 4 points. That's pretty much puts it pretty in line with what we were just talking about from the RBX a little bit earlier. Skew-wise, out in March, 16.5% rich were the puts last week. This week, 19.8%. So those puts getting juicy in the Russell 2000. The calls, 11.9% cheap this week, 12.3% cheap. So the calls coming in, puts getting a little bit juicier out there, which is kind of interesting out there in March. Number one trade out here this week was actually in March. It was the 2375. So we're just talking about 5 delta calls, Matt, in March. That's over 200 about 250 handles out of the money. Not sure if it's quite a 5 delta, but it's a pretty small call nonetheless. So maybe that's what you're talking about here, is being played out in full effect. We saw a few thousand of these going up out here this week. So that seems to be, most of that actually was on Wednesday, about 1,300 going up on Wednesday, the rest going up on Monday. Some of that seemed like it was closing on Wednesday, though, too. So maybe these small call traders here in Russell 2000 getting the heck out of Dodge on Wednesday. Either way, kind of what you were just talking about, Matt. Crazy out-of-the-money calls seem to be dominating the tape out here in Russell 2000. Again, an interesting flipping of the script, because if you're listening to the show for a while, for a long time, Russell 2000, it's been kind of all far out of the money puts for quite a while until the end of that year, and that really started to change, and now we're seeing continued interest in upside call. Speaking of continued interest, Sean, you were talking on the show last week. The numbers had just come out. The report was hot off the presses right before our show last week. Didn't have a time to sink our teeth into it then, but it is an interesting one. It comes out twice a year. They do a mid-year and then a kind of at the beginning of the year, kind of a looking back on the year report from the folks over there at FIA, the Futures Industry Association, and they crunch all the numbers for the global derivatives market. So not just U.S., you're talking Asia, Europe, all over the place here, all added together, all global futures and options trading. They crunch all those numbers. And as you might imagine, last year, a pretty impressive year. Global futures and options volume last year, record 46.75 billion contracts in 2020. That's up 35.6% from the year before. Total futures trading up 32.7%, 25.5 billion. Total options trading up 39.3% to about 21.25 billion out there. OI, so open interest, also up, hit a record high of 987.3 million contracts at the end of the year, up about nearly 10% from the same time in 2019. Third year in a row that global exchange traded derivatives, this is not OTC anything else, this is just all the exchanges all around the world, listeners, set a record in terms of total activity. As in the last couple of years, we saw big growth in Brazil and China and India driving a lot of that increase. But bringing the focus back to the U.S., bringing the focus back to equities, the retail explosion that we were just talking about in names, not just GameStop, but everything in 2020. That was the story of the options world in 2020, was the retail folks diving in en masse. They also cite that here in the report. The retail explosion in the U.S. equity options was a huge driver as well. Obviously, 52.5% increase to about 7.5 billion contracts out there. So fascinating stuff across the board. Sean, I know you've been sinking your teeth into this report all week. What are your thoughts on these crazy numbers coming out of FIA, sir?
Before I start chatting, I just want to compliment the FIA for the hard work that they do on so many various fronts. They have a fantastic website, FIA.org. And Walt Lukin and company, I couldn't say enough for all the work they do representing the futures industry globally for the futures markets. They cover all exchanges. They have global offices, and they are just an absolute pleasure to work with. Just a fantastic group. So I just wanted to say thank you to the Futures Industry Association for all they do for the futures industry. But yeah, these numbers are off the charts. Record volumes, record open interest, equities has lit up the tape globally. The CME is enjoying some really good, strong numbers. And of course, I'm going to focus on my Russell suite of product. They saw an increase of 70% in terms of volume in the Russell family at CME Group. That's huge. That's between the Russell mini the mini futures and the micros. The micros have just absolutely exploded across the board at CME, but Russell micros have exploded in their own world. E-minis, the micros, Options on the Russell 2000 are up 20% at CME Group. Cboe Global seeing a huge spike in the last quarter of last year, and that spike in volume and open interest continues. It's all really fantastic to see. I can't say enough about the numbers. A lot of the numbers, as the market, as the report says, other exchanges have seen lots of growth, and those are in other regions, South America with Brazil and China, and a huge bump in India. But it's fantastic to see this across the board in most asset classes, and 2021 is looking like we're going to be seeing some similar activity.
Yeah, just looking at these numbers here, I mentioned equities were the big driver last year. FIA says equity-related derivatives accounted for the majority of the increase in trading activity in 2020. Futures and options on equity indices, which is the largest overall category in the listed derivatives markets around the world, in overall volume, it hit 18.61 billion contracts in 2020, an increase of 6.15 billion, or nearly 50% from a year ago. Futures and options on individual equities, just a tick under 10 billion, 9.9 billion in 2020. That's an increase of 3.8 billion, or almost 2/3 from the previous year. So big numbers out there in equity land across the globe last year, but also a lot of it here in the U.S. Speaking of those U.S. equities, Matt, I know you've been crunching more numbers since we just chatted. What else do you have in store for our listeners, sir?
Well, you were talking about the implied volatility of the Russell versus the implied volatility of the S&P, and one of my things I like to look at is that ratio. So when it gets and I see it as positively related to the market overall direction. So what that means is when the Russell volatility starts getting high relative to the S&P volatility, that trend is usually bullish or very good for the market. But when it starts to fall, then that is more negative for the market. And what we saw coming up until it peaked early this week, the volatility of the Russell versus the volatility of the S&P at about 60%. And that's about how high it usually gets. And then it's been coming down since then this week. So that is starting to put some worry into the market for me, that relationship. So it might be interesting for your readers. We have a IV to SPY ratio. We do this for a lot of different indexes in our charting at ORATS, but that's one of the things I look at, Mark, and I thought that was pretty interesting.
It is interesting. We could spend the whole show just going on and the madness that is engulfing the world of equities right now. There were some other drivers out there on the FIA report that they mentioned for big drivers of volume last year as well. In particular, energy and ags. Energy sectors and ags, they had the highest growth rates next to equities, where energy futures and options combined up about 24% to 3.15 billion contracts, and ag futures and options up 45.5% to about 2.5 to almost 2.6 billion contracts. Both of those categories driven a lot, obviously, by action over there in China. Matt, where should we hang our hat next in our TWIFO journey today? Should we hit on one of those we just mentioned, maybe the energy sector or something in the ags, or is there some other complex that is lighting up your tape out there today, sir?
No, I think the ags are interesting, Mark. Go for it.
It's time to get our hands dirty exploring the latest options trades and trends in corn, wheat, soybeans, and more. It's time to talk ags.
Ags. Do you have a particular ag you'd like us to sink our teeth into, or just all across the board ag love?
No, just across the board ags.
I knew you were a corny fellow. Let's see if that translates into some interesting paper. Actually, since we're talking ags, obviously we can't really sink our teeth into what's going on over there in all things softs and lumber. But we mentioned it last week, and it's happening again. Well, let's go to a subset of the ags, because there's no actual ags on our movers and shakers this week, but there is something in the ag complex that is lighting up our upside. Number 5 to the upside was our old friend, Lean Hogs, listeners. Hashtag HOGLove. Not a name we get to talk about all the time here, but it has been moving a couple of, it was number 2 to the upside last week, and it was number 5 this week. And it's doing some paper. I mean, it used to do a paltry couple of hundred contracts, 37,000 contracts on the tape this week for Lean Hog. So that might merit a little bit of closer investigation out here. You think GameStop's crazy? Dive into the hog markets. All sorts of fun. Not quite 1,000 vol, but interesting stuff nonetheless. Most of that action this week coming in the April contract, doing about 42, almost 43% of the paper out here this week. So almost half of that 37,000 contracts coming in the April contract. If you're wondering, that April future is at about 76 and almost a half. So that gives you a frame of reference for where we begin our conversation today. That at the money 76 strike in the April future, let's go about 28, almost 29 vol, up about 2.5 points this week. So vol getting a little bit juicier out there in hashtag Lean Hogs. I mean, it's no 1,000 in GameStop, but then again, what is? Looking at the skew here in Lean Hogs, this contract here, 9.5% rich is what the puts were last week. This week, coming in a little bit, 8.9%. And then we've got calls, 7.2% cheap last week and 7.9% cheap this week. So puts coming in a little bit, calls getting a little bit cheaper as well as the vol has ticked up. So that's kind of interesting. If you're wondering, by the way, since Monday, there hasn't been a huge move in Lean Hog. So it really, most of that move seemed to come at the tail end of last week after our show, hence the big swing to the light side this week. And number one most active contract out here, I said we're at about a 76.5. It's the 80 calls, doing almost 3,500 contracts out here. That's a pretty active contract for our friends out here in Lean Hogs, with the most active day actually Wednesday, about 1,800 contracts, about 1,200 today, and the rest scattered throughout the week. Most of that opening. So it looks like some opening upside here in April in the Hogs, which is interesting because the vol actually, the skew came in on the call wing. So maybe some opening upside overwrites there, driving down the skew a little bit. Either way, all you folks out there who want some more esoteric products fighting their way onto the show, there you go. You got your taste of all things Lean Hogs.
It's time to tap into the deep options well of black gold, Texas tea, nat gas, and more. It's time to talk energy.
Matt, energy is always a complex that moves a lot every week, and it's moving again this week. We have RBOB and nat gas on our tape. Is this a complex you watch over there at ORATS? I know you guys are busy with your 5 Delta calls and Russell and your back tests and everything going on in GameStop. You ever have a chance to check out the energy markets over there, sir?
Well, especially when it was going crazy and went negative, we were looking at some of those, mostly in the ETFs. We check out XLE. It's not catching on like some of the other names, but when there was the XOP, that was when we really got a lot of calls, Mark.
I'd imagine interesting times, certainly when all that madness unfolded in the negative territory. Everyone was obsessed with all things energy. Folks are also obsessed out there with nat gas. Like I said, it moves so much. It's to the upside or to the downside every week on our movers and shakers report. This week, it's number 2 to the upside. It was number 3 in the other direction last week. It's been a little while since we checked out nat gas, so I think we'll hang out there a little bit. WTI is not on either of our reports. We'll give WTI a little bit of a break this week. But energy, again, still moving. RBOB also lighting it up this week, number 4 to the upside. Nat gas coming into showtime, that front contract, 2.681. So like I said, it's a cheap contract, hence a lot of the big percentage swings we see out there. That front March contract has about 26 days to go, and that's good because it did 47.2% of the paper. So that's where we're hanging our hat out there this week. By the way, if you're wondering how much paper nat gas actually does, 342,000 contracts on the tape this week. So a pretty active contract. Let's go out there to the vol. Vol actually, as you might imagine, given how much this thing swings around, is pretty juicy. Again, it's no GameStop, but what is? It's at a 50 pretty much exactly right now, up about 2 1/3 handles from last week. The skew, the puts last week, 1.3% cheap. This week, almost 3% rich. So puts getting a little bit of a bid here this week. Calls last week, 3.2% rich. Now 3.2% cheap. So the calls coming in, puts getting bid. That's kind of interesting. Of course, we have seen a nice run in nat gas, up 7.09% since our last show. That's hence our movers and shakers report. And then this week alone, up 9.16%. So obviously we're rallying up. We're blowing through some strikes, and the puts getting bid and the calls coming in. That's kind of a traditional skew move like you might expect out there. The most active contract out here this week looks like it's the even money stuff yet again. The 3 calls in March dominating the tape, going up 33,465 times. The most active day was yesterday, Wednesday, 19,500. So when everyone and their mother was obsessed with GameStop, I mean, we had a Fed announcement yesterday. We had Apple, Facebook, and Tesla earnings. No one cared about any of that. It was all GameStop. Still to the tune of 19,500 options contracts going up just in these March 3s here yesterday. So some folks are paying attention to nat gas while the rest of the world was paying attention to GameStop. And that was slightly opening. Seemed like a lot of back and forth on that strike yesterday. A total of slightly opening of almost 5,000 on the week here. So interesting stuff afoot here on the 3 strike in March. Let's go a little bit farther out, see if we see any other weird stuff afoot. And it's mostly 3 1/4. I mean, there's not many strikes when the product is 2.68. Not a lot of strike action you can really choose from out here, but interesting stuff nonetheless. So all of you who've been fighting to get a little nat gas on the tape as well, there you go. April also pretty active with 3 calls, about almost 11,000 going up there. So it was the 3 strike pretty much across the board, which again, it's a round number. Not exactly surprising that's dominating the tape. We got time here for one more. Mr. Matt, a little birdie, has informed me that from time to time, you like to hang your hat out there in the metals, sir. In particular, silver. We got some metals on our list this week. No silver, but we got platinum and palladium taking it on the chin this week on our dark side list. What, sir, has been lighting up your tape out there from a silver perspective, sir?
Werewolves beware. It's time to explore the options activity in silver, gold, and other shiny things. It's time to talk metals.
Well, Mark, I dipped into the Wall Street Bets chatter. And,
that's your first mistake, sir.
Yeah, well, I heard they're talking up silver, and so I checked it out. And lo and behold, the calls are off the chart. They've been, huge volume, largest volume in a year almost in options, at least on the SLV ETF. But in the volatility's up. They're buying the calls. So the listeners might want to put silver on their radar in the coming weeks. If the you only live once, YOLOs get a hold of silver, look out, Mark.
YOLO time in silver. Let's see. Let's dig into it for ourselves out here, shall we? Coming into showtime, silver ticking up about 3 3/4%. So bucking the trend of the other metals out here. That alone would be good for almost number 4 on our upside this week if we just looked at it from a Monday perspective. Silver right now 26 and about a half out there. So that's where we're hanging our hat. The most active contract out here, by the way, silver, 54,000 contracts on the tape. So pretty active. Again, it's not gold. And it's not even, what we were just talking about with nat gas, but still, it's a pretty active contract from a metals perspective. 63.3% of that coming in the March contract here this week. The vol out here in silver. This is pretty juicy. I'm not sure if this could be what you're talking about, Matt. This could be the impact of our Wall Street Bets crowd, or maybe I'm getting a little bit of late data. But I'm looking here at a 62.13 vol here in the March contract, up 26.5 points, Matt, this week. That's enormous. You think that's your Wall Street Bets crowd, sir? You think maybe my data's going hog wild here?
No, I mean, this is what we're seeing. The vol's just cranked up. and it's those calls. So that's a telltale sign that when retail when they gang up, and there are 4.5 million of them now, look at, especially in these thinly traded instruments, Mark, look out.
Dang, Wall Street bets coming for silver next. So something certainly that's the case across the board. We see Jan up. Well, that's contracts going away today, so we won't count that. But February up, the Vol's up 42 points. Other contracts 33.5. This is wow. This, if I hadn't just seen the GameStop madness, I would say this is insane. But this is kind of par for the course these days. Let's see what the most active contract is, Matt. Maybe that will prove your theory out here. Looks like the 30 calls in March. So upside calls, Matt, leading the dance. 20. It's all today. 2,561 of these trading of the about 3,000 that went up this week. All of that today, Matt. Also, the 38s are going up 1,366 times. The 28 calls 1,549 times. 50 calls 50 in March, going up 1,284 times. 1,908 times out here. Matt, you might be on to something, sir. Looks like, shall we say, the aggressive bunch may be out in force here for... let's look at the skew really quickly. See what the skew is telling us as well. Last week, the calls in March. Now, this is interesting. And this also is going to be a little bit obscured by the massive swing in volatility. The puts last week 14.1% cheap. This week 4.5% cheap. So puts getting bid up. Calls last week, Matt, 17.1% rich. This week 4.7%. So it sounds like the calls actually came in an aggressive amount, which is surprising given everything else we're seeing. But we're seeing huge moves. I'll have to dig into that shift and slide. We saw a big shift in the skew out here this week, not so much on the slide perspective. Maybe that's accounting for some of that. I'll have to dig into that tool a little bit more. You can check it out for yourselves, listeners, on our TWIFO reports. But wow, this is fascinating stuff, Matt. Interesting stuff. So maybe your supposition is correct, sir. Perhaps the Wall Street bets masses have now set their sights, their targets on silver, sir. If that's the case, Uncle Mike, your cohort from the advisors option, will be quite happy. He's quite the silver bull, sir. So interesting stuff. But yeah, there's a lot more to be analyzed here in silver, listeners. I don't think we've heard the last of this. See, Matt, that's why they call you the Oracle of New Hampshire, sir. You're on the early tip of this stuff, sir.
Well, I got to tell you, my wife is a Twitter professional, and she feeds me a lot of this stuff. So we're a team over here.
There you go.
New Hampshire.
There you go. Forget fundamentals. Forget any other analysis. It's all, what are the message boards saying? And clearly right now they're saying something interesting about silver. Let's see what you guys have to say. It's always interesting. It is time for your futures options feedback.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/The Options Insider, stocktwits.com/Options Insider, or via questions at theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's MIXLR.com.
All right, welcome to your futures options feedback segment. You guys clearly have a lot of thoughts about what's going on in the market right now. Matt, you were just talking earlier on the show about what you termed the Robinhood effect, which is something we've all been talking about of late, how it's really being felt now in the Russell 2000, which in particular are some of these much smaller delta calls, the 5 and under delta calls that are small enough that they can fit into a lot of these small accounts. And so Sam Zai was listening. He wants to know, so is the options market fundamentally broken? That's what he wants to know. And it's actually, ironically, a good question, Sam, because it's what we want to know from you guys this week as well. We actually have a poll live right now for you guys talking about this in a little bit more detail, this frenzy over GameStop. And now, of course, you can expand it to Russell 2000. Who knows? Maybe even silver in the near future. This frenzy is shaking the options world to its core. We've heard quite a few people who actually are in spots where they probably should know, what they're talking about, suggesting that out-of-the-money calls should be priced much higher going forward to account for this, that there's a structural problem with the way we price options right now, in particular out-of-the-money calls, and it's not adequately accounting for this dynamic. So we asked you guys, very simple question. Do you agree with that? Yes, this eruption in game is going to change everything going forward. No, this is a joke, or what the heck is happening? Matt, since he sent his question about your comment first, I'll give you a chance to. If you have anything you want to share for Sam, have at it. And then B, what do you think about our poll? And then C, 3 questions. More importantly, what do you think our audience is voting for in our poll, sir?
Well, I do think that all this interest and the Robinhood effect is really going to change structurally what's going on. Now, the difficulty is to figure out where they're going to play, because when they jump in with both feet into certain names, especially thinly traded names that might be hard to borrow. So, I think, especially when there's a possibility of a short squeeze. So now how might you identify that? There are, one of the calculations that we do in our data API is we present the borrow rate. What the borrow rate is how much you have to pay if you are shorting some stock. So for example, GameStop, they got up to like 150%, which is a crazy number. Now they're down to about 60%. Let's see who else, AMC's on there. They're at about 60%. Best Buy is about 25%. So I think definitely in those names, there are some structural reasons why, you will want to really look carefully at call skew. And just the fact that what I was talking about earlier, this ratio of the 5 deltas has never been this high. So yeah, you have to watch. So I would say yes, it changes everything, and Mark. So that's where I'd come down on it.
Wow, voting for yes, this changes everything. That'll be nice. I think music to the ears of some out of the money call sellers, in particular the covered call traders, who like to get a little bit of extra juice for their calls. Matt's saying maybe you need to get some. Sean, what are your thoughts here on all of this, on our poll, on Sam's question, and also what do you think our audience is voting for?
Boy, your audience, it's going to be a mixed bag. I think your responses are going to be all over the place. A lot of this just brings back memories of the days when I was an options floor trader, when downticks where you couldn't short stock on a downtick, right? We had a strategy when I was an options trader, and I used to be able to do this quite frequently. And I would buy 100 delta puts in stock from various market participants so I could hit the bid, and then I'd exercise my puts. But that was back when there was a downtick rule. It's really interesting. I don't. I'm mixed on this whole subject. But be sure our exchanges and our regulators are going to really be very, very clear on moving forward in trading scenarios of these sorts coming up.
Yes, we have certainly not heard the last of this. We haven't heard the last from you on this subject. You guys right now, the voting is hot and heavy, and you're 73.5%. So that has come in. It was higher. 73.5% saying, no, this is a joke. 16.9% saying, yes, this changes everything. And 9.6% saying, what the heck is happening? I'm with you there, all you folks who say that, because it is insane time. On one hand, it is hard to fathom, market makers being forced to somehow structurally force in more juice to their upside calls. But I think, as Matt alluded to, they probably will, in some of these names that seem like they're ripe for this, certainly start pricing some of that in, because it's just a self-preservation mechanism. Now, they're not going to do it across the board. Fundamentally, all calls are now juicier because they'll end up owning a lot of calls. And that's also a road to destruction. But interesting, certainly, I'm sure they've already done this, obviously, in names that are on these heavily shorted lists. They're jacking up those calls. So whether that changes everything for the market, I don't think so, because like I said, covered calls traders will have a field day. But interesting stuff nonetheless. And you guys certainly are voting in. Get your votes in at options if you want to chime in here. Let's see. Speaking of chiming in, our old friend Baiju Thomas. He wrote in with kind of an addendum to a question he sent us last year. He was kind of early on the tip of what's going on now. Not so much in GameStop, but just from a position perspective. He says, "Hi, Mark. Hope you are well." Thank you. I am. I remember raising this question last year with you, and you had said no such thing existed on the CBOE, at least in the exchanges, where the futures and options tracks the total stocks in supply to limit the trading in derivatives. Now with the GameStop situation where the shorts have exceeded the total number of shares in supply, would you suggest some form of tracker to keep tabs on how many shorts are in supply? Thanks. And he also included his previous question, which we recall. He mentioned how the regulator in India, SEBI, they actually do limit this. They track the amount of futures and options outstanding on a particular underlying. And if it exceeds some ratio, I believe their ratio is 30x, then they will actually halt trading in the derivatives and keep the cash open, but halt trading in the derivatives until things come back into some semblance of line. You know, it's an interesting question. When you asked originally, Baiju, we were talking, there are position limits, but they're for large firms, and they're pretty enormous. So they're not something people are really going to talk about. But you're asking more of an interesting take on it, which is in aggregate, which is not something I don't think the regulators ever really thought about, that they would have to come in and effectively regulate the activity, not just of large firms, but the aggregate activity of these small mom and pop players out there, because that's what you're talking about. Are we going to now, I mean, people are already mad that Robinhood and others have effectively done this. They've shut down the opening positions on things like GameStop and others, and that's causing a huge backlash. But you think the regulators maybe should step? It's an interesting question, because GameStop putting up numbers, you're right, that exceeded from a overall notional, from any sort of perspective, what's been trading in the stock of late. So it does open an interesting question. I'm very loath to come out and say, hey, I want maybe it's the diehard libertarian streak in me, but I'm loath to say, hey, we need a lot of strict regulations on things, because I've seen how the government has implemented them in the past, and they're usually kind of ham-handed and not very effective. Look back when they banned short selling in their infinite wisdom not too long ago. So I'm always a little leery to say that, but on the other hand, we are seeing things that are completely beyond the pale. And when that happens, you know, you're probably going to see your regulators step in some capacity. Matt, I'm curious for you, our buddy here, Mr. Baiju, always has interesting questions. What are your thoughts on what he's proposing here? Do you think we need something in the U.S. which is some sort of aggregate limiter on how many, you know, derivatives can actually trade on an underlying versus the underlying float going up? And if so, you know, what should that be, sir?
Well, I think, I'm also have even more of a libertarian streak in me. And I think that,
well, you are in New Hampshire. I think it's required up there, sir.
Yeah, the market can handle it. I mean, what will happen is the market makers can't put up as much size, and the markets get wider, you know, because if they can't offload their deltas on the underlying, you know, they're not going to make very high quality markets. So, you know, I think that there are, ways that the market can handle this question that Baiju asked. And, you know, also, as you say, GameStop has gone where the short interest is higher than 100, and you might wonder how that could be, since you and I, in order to sell a stock, we have to locate it. Well, market makers have an exemption in this. So what's happening is, you know, they're buying so many calls, and the market makers are, finding themselves, you know, having to chase stock, and they're also buying, you know, puts, and that's forcing them to sell stocks. And so, the market makers are what drives it past 100%. So, you know, there are ways in order for the market to compensate for this. You know, we track it in that borrow rate that I'm talking about. And the funny thing is that GameStop down today, now the borrow will come down with it, because what's happening is when the market's running and then that's when people will want to sell the stock, and they'll pay a lot for the borrow. Now with the stock down, I think a lot of people got out. And so the market has these mechanisms, the equilibrium mechanisms, in order to handle it. When you get the regulators in here, you get the mess that we have now. I mean, I think what happened in a lot of these brokerage houses is the government has been calling them and say, don't let these traders trade. So they're just screwing things up royally and really pissing people off. So don't let the regulators in there. They have no clue. The market will handle it, Mark.
Interesting stuff. I don't think anybody tells Petterfee what to do. I think Petterfee he shuts things down when he doesn't like them. And IB was one of the first to do that. The others, the TDs, the Robinhoods, maybe. I think Petterfee kind of runs his own ship over there. But interesting, we could discuss this for ages. I have a feeling we'll be talking about this again on all of our programs. Right now, Citadel is trending on Twitter. That's the world we live in. They're kind of obscure unless you're in the business market-making firm, and hedge fund is suddenly trending. So that's the world we're living in. It's not trending in a positive light, listeners. So there we go. That music, unfortunately, means we've come to the end of this portion of the conversation. I think as your questions have alluded to, we have not come to the end, though, of this conversation as a whole. There's a lot more to be unpacked. We don't say this often, listeners, but when there's something out there that we literally have not seen before, take it seriously. It's something that's to pay attention to, and something that warrants investigation and introspection on your part out there. Investigation not from the regulators so much, but investigation from yourself to do your due diligence. Don't just dive in to these names willy-nilly, despite what you might be seeing on Twitter out there. All right. A lot to unpack here. We'll have a chance to do it again tomorrow on Vol Views on this show again. But before we go, let's go back around the horn. Sean, there's a lot of people right now who have a lot of questions about all things equities. They probably want some research. They want to know what's going on with weights and valuations of things in the Russell 2000, maybe what Matt's talking about with these crazy calls as well. If they are so inclined, where should they go? What should they do, sir?
Just go to FTSERussell.com. All the information's there. I'm happy to help. So Sean.Smith@LSEG.com. I'm happy to help anybody that has questions regarding the Russell 2000 index. Mark, I got to say thanks for having me on the show today. Matt, boy, it's just a pleasure to have you on the show and to join conversation with you. It's always so enlightening and so valuable. So I wanted to say thank you. I do want to mention one exciting thing that happened at FTSE Russell this past week, and we launched some new FTSE Russell index products on our big, fantastic Asian partner, Singapore Exchange. We launched a series of ESG indexes, the FTSE Emerging ESG, FTSE Emerging ESG Asia, Asia X Japan ESG, and FTSE Blossom Japan Index. So exciting new products out on our with our Singapore Exchange partner. Couldn't be more excited about those. But back to our conversation. More to come. This is a really hot topic as we've been discussing today, and I look forward to having more of that with you, Mark. And again, Matt, fantastic to have you on the show today. Thank you.
Yeah, we are not done. Not by a long shot. We're done for this episode, but not done with this topic at all. Matt, if folks have questions, I have a feeling that they might about these crazy 5 delta calls, about what's going on market maker exemption, about they want to look at your earnings volatility, they want to look at your back tests, all the other stuff you guys have cooking over there in ORATS. Where should they go? What should they do, sir?
Yeah, we've been busy of late, but you could always contact me, Matt at ORATS. Come to ORATS.com. Sean, it's great to be on with you. Always had a lot of fun from the election specials to the other shows. So it's been really interesting. Yeah. Come to ORATS.com. I could already see Twitter lighting up with, all the stuff that we've been talking about. So I think it's going to be a little bit busy, but I get a lot of this information from our deep historical packages. We have a charting software. You could see a lot of this. We're pretty active on the blog at blog.orats.com, Mark. So thanks for having me on. It was a great show.
I think if your wife manning the Twitter is going to have some stuff to man, I think, Matt, she's going to be busy, at least for the foreseeable future. If you want a double dose of Matt, listeners, stay tuned for the advisors option hitting the network sometime soon as well. You're going to get a double dose of Matt kind of back to back. So if you liked that, you got more coming your way. If you want to check him out in between his appearances, you know where to go. Orats.com, ORATS.com. All that data, all the earnings data we get, Matt's the guy who crunches it, him and his team over there. So check it out over there. The back tester. Who doesn't want to back test an option strategy right now? If you want to say, what's the best time to put something on, or how should I structure it? Matt's the guy to talk to. Orats.com is the place to go. You know where to go for all this data, all the stuff we talk about on this show every week. CMEgroup.com/TWIFO or /TWIO. They both work. Hey, check out that silver report. There's some fascinating stuff afoot right now in silver. Everyone's hunting for the next hot thing. And maybe our TWIFO report will lead you right to it. CMEgroup.com/TWIFO. And on behalf of everybody over there at CME and Sean, everybody in FTSE Russell land, and Mr. Matt, and indeed myself, I want to thank all of you out there for downloading, streaming, subscribing, for listening live, for sending in such great questions. Keep them coming. You guys are really insightful and introspective. We appreciate it. We'll see you back here tomorrow, noon Central, 1 p.m. Eastern, for Volatility Views. And it all kicks off again on Monday with the option block all the way through to Thursday and another episode of This Week in Futures Options.
This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. Investors in the U.S. and around the world are using FTSE Russell indexes to benchmark their investment performance and create investment funds, ETFs, structured products, and index-based derivatives. Many Options Insider Radio Network listeners will be familiar with the Russell 2000 Index. Russell 2000 futures and options are currently trading on the Chicago Board Options Exchange and CME Group. For more information, please visit ftserussell.com, cboe.com, and cmegroup.com. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.